Looks like we're live, folks. Looks like we're live over here on IG Land / Instagram, here on Facebook. So let's do the darn thing. All right, all right. So I apologize. I'm being a little late today. I just had a client. So we finished up. I'm excited to get rocking and rolling with my new IG fam over here, and obviously the Facebook fam right here. So let's dive right in. You're probably wondering what this is about if you're new out here in Instagram land, and hopefully have some new people on Facebook. Well, let me ask you some questions, all right, before we dive in. Are you concerned with rising inflation? All right. Are you concerned with Are you concerned of the fact that you won't have enough money for retirement? Or are you familiar with the BRICS, fiat currency, and geopolitics? If you are familiar with any of those, answer yes to any of those questions. This is the live for you. All right. So this is the Golden Future Weekly live, right? Weekly commentary on precious metals, retirement, geopolitics, and economics. All right. Now, I am Ronnie Kenyatta, aka Coach Ronnie. I'm a strength and conditioning coach. I've been doing this for over 20 years. Like I said, I just finished working out with a client. I did this for 12 years within the New York Mets organization, right? And at that time, I was helping athletes get stronger, faster, more mobile, more explosive. But now I'm here talking to you about the topics I mentioned: geopolitics, economics. What else did I miss? Geopolitics, economics, precious metals, and retirement. So that's what we're here talking about today. That's what we're talking about every Tuesday at 10 o'clock. So let's dive in a little deeper, right? So let's say, just to let you know, I'm not a financial professional by any means. I want to be clear about that. If you're serious about, getting your finances in straight, your numbers, whatever the case may be, contact a financial advisor. I'm just an individual, right, who had a kidney transplant back in 2017. When your health is off, you wonder about your future. In my case, in my age, you start thinking about retirement. How you going to be able to handle that, all right? So that caused me to reach out, start doing some research. I was always into precious metals. I was into precious metals back in the 2000s, right? That's when I started. That's when I initially got the disease. So, I just backed off at that time. But now I'm back in the precious metals. So now, if you're interested in learning about precious metals, how it can be used as a hedge against inflation, how you can use collectibles to possibly grow your portfolio or your retirement fund, DM me. DM me here on Instagram and message me here on Facebook. All right. So let's dive right in. So I gave my disclaimer. What I usually like to do now is let you all know where gold and silver stand right now. So what I have here on my notes, gold is at $2,374.45, so it's up $4.45. Silver is at $31.10, that's up 16 cents. All right, that's where we are. I love to start off with that. I love to we dive into the precious metals. All right, so I got the wrong sheet right there. That's not a good start at all. Let's see. I always have my notes over here, everybody, so bear with me as I go over this right here. You know what? I'm going to go with, I printed this up last night, and I think I printed up the wrong paper. Let's see. Boom, boom, boom. Let's go ahead and, I'm going to dive into this plan B right here, my notes. So I guess I printed up the wrong information here. Let's see. All right, so this is kind of weird. It has the right information on one side, the wrong on the other. All right. Okay, here we go. I found it. My apologies. We're good to go. So I'm going to talk about precious metals right now, right? And so last week I talked about gold and gold situation, the gold status. Gold is currently in the early stages. This is according to the professionals, in the early stages of a bull run. And what they're trying to do now is they're trying to establish the base price or the floor price for gold. So, for example, before this bull run, the base price might have been $600, $800, right? That might have been the case at that time. But as you know, as I stated, I told you where gold is right now, so it's shot through the roof, right? So right now, the experts are trying to find a new base. people are saying like 2200 is a new base. We're sitting at 2300, like I said. So that's what's happening. That's one of the things that's happening in gold. But you know what's quietly starting to creep up is gold's little brother, silver. Silver's starting to raise a little heck, low key that is. So what's going on with silver? Now I'll tell you this. Keep in mind, I'm just reading what I have here in the notes. Silver historically outperforms gold in a bull market. All right. So like I said, one of the early stages of a bull run for gold, but then you have silver, what historically has outperformed gold during these bull markets. All right. For instance, right here, gold charted a gain of around 40% during the pandemic. Meanwhile, silver was up a whopping 141%. All right. So, gold, you look at gold, it's not nearly 2,300. I said it's $31, but we're in the early stages of that bull run. So historically, silver has a long ways to go. So not an advisor. I can just tell you what I'm doing. I'm accumulating a lot of silver right now. All right, accumulating a lot of silver right now. So it might be something you want to think about. All right. Now, there's a little information I have here dealing with silver and the demands for silver right now. Silver demand is expected to hit 1.2 billion ounces this year. That's going to be the demand for silver coming up in the near future. 1.2 billion ounces a year. That's going to be the demand. And the demand will likely increase in the years ahead due to the solar market energy. All right. Due to the solar energy market. All right. And that's according to a study done by the University of South Wales. All right. So, and to conclude with precious metals, gold is going to do fine, and we'll see what happens when they reduce the interest rates. That's going to be coming up, I think, later. Somebody correct me if I'm wrong if you're watching, but they're supposed to be reducing the interest rates later on this year. I think around September. So again, correct me if I'm wrong on that. So that's where we're going to leave precious metals. All right. Now, so far, if you found value within this presentation, just give me a 1 down in the comments. If you're finding value here, again, just drop that 1 over here at IG land as well. Drop that 1 in the comments, and we will proceed. We're going to transition here. So, this is, I want to dive into economics a little bit. Apparently, the S&P and NASDAQ hit new highs last week, right? New highs. Now, is that a good thing, or is that an okie doke, right? Or is that the old banana in the tailpipe? What do I mean by that? So let's introduce the big three and we'll dive into that. All right, the big three meaning right here. We have BlackRock, we have State Rock, and we have Vanguard, the big three. All right. Now, one of these, all these corporations, investment firms, which they are, I'm going to break them down in a minute, they own each other. So really, it's one big corporation, right? One big corporation because they all have shares of each other. So, just in case you're not familiar, Vanguard and BlackRock are two of the world's largest investment firms, right? Vanguard focuses more on passive options, and BlackRock offers a number of strategies. All right, so there you go, the big three, and let's get some stats on the big three. All right, so you might be familiar with, you might not be. So, Vanguard and BlackRock both have unique and very different fee structures. All right. Now listen to this. These three firms own 89% of the S&P. 89% of the S&P. Two firms all own each other. So basically, one corporation, one company, own 89% of the S&P. All right. Got this from Business Insider on Yahoo Finance. The largest shareholders. They are the largest shareholders. 40% of U.S. companies purchase and 26% of affordable homes. And check this out. This was done by, I found this on Business Leader Yahoo Finance. There was a study. This was a study done in 2017. So this was in 2017, folks. And that was what the stats at that time. 40%. They owned 40% of the companies in 2017. They purchased 26% of affordable homes in 2016. So these people are getting after it, right? They're getting after it, as we like to say in my, my profession here. So my question to you, I want you to drop your answer to this question down below. These guys are friends? Are these guys are friends, or are they public enemy number one? All right. What do you think? Comment down in the write what you think down there in the comments. Let me know. Are these people our friends, or are they public enemy number one? If you can give a why, that would be tremendous. All right. So let's go ahead and move on. This is just for anybody who's new over here in IG land. This is always going to be about 15 minutes long. So I'm not going to, stay on here all day. You have stuff to do. I have stuff to do, right? So now we dive into retirement tips, all right? Which is, like I said, the original reason this was all put together. I told you I went through the kidney thing, and when you go through a life-altering event like that, you first of all, you get your health together, number one. Number two, you got to see where you are financially, right? So that's where the retirement concerns came into play, and that's why I'm here about to give you some retirement tips, all right? And we'll conclude with these. All right, so retirement tips. Take a mini retirement or a gap year. So if you're emotionally or psychologically ready for retirement, but your finances aren't quite there, you might explore taking a mini retirement, extended 3 to 12 months vacation from work, So that's something to consider. Prioritize what's important and drastically scale down expenses. I think we know that, if you're not where you need to be for retirement, you definitely want to go ahead and watch what be smart about your expenses. That's it, expenses, all right? So let's go ahead and dive on. We finished that one. Let's see. Think outside the box. Rethink housing. This is something that it might be new to you. Many people don't think about their home when creating a retirement plan. However, your home is probably your single greatest expense. According to the Employee Benefit Research Institute, the cost of home and home-related expenses accounts for 43% of spending for those who are 65 to 74. Keep that in mind. Reducing your costs could be one of the best ways to retire securely. All right? Makes sense, right? That's 2, that's 3, or spend more. Let's see what spend more is talking about. 3, let's go ahead and continue. I already talked about thinking outside the box. Let's see. Rent out your home or a room in your house. Something that's, I don't think that's not a new concept. That's something many people may consider. Rent out your home or room in your home. Housing sharing is becoming more and more common, and Airbnb has absolutely exploded in popularity. Renting out a room in your existing home, either on a permanent or short-term basis, can be a great way to fund retirement because it uses existing resources to generate money. All right, something you might have thought about. Here's one that's definitely happening at a high level right now in the States. All right, and that's retire abroad. The United States, especially certain parts, are extremely expensive places to live. Retiring abroad can offer adventure and a dramatic reduction in costs and structure in your for your retirement. All right. I'm going to read a little bit of the next paragraph. There are affordable places to live in all corners of the world, places where the climate might be a little warmer, where the cost of living might be a little less expensive, and the healthcare might be more affordable. So, if you've been thinking about moving abroad, there's a couple of facts there that might help sway you either way, right? But let's say moving abroad is an option. Let's see. Do I have anything else to talk about retirement? I feel like I'm missing something. Talked about downsizing. I didn't talk about downsizing. Downsizing, if reducing housing costs and releasing your home equity interests you, downsizing might be a great option. When you downsize, you sell your existing home and buy or rent something less expensive. It can be a smaller home or a residence in another community, right? So downsizing is something. Like I said, I feel like I missed something. We talked about thinking outside the box. Okay. Well, I guess that is all my retirement points I wanted to make. It is 10:34. That's putting us at around 15 minutes, which is good. So let's see, actually 14 minutes here on Facebook. Perfect. Now I always try to leave with a call to action, some type of action you can take to benefit yourself. Call to action number 1: check out, and I'll put this down in the comments. Check out the retirement planner. All right, it helps you think through detailed budgeting for your future, and you can vary your overall spending as well as spending in individual categories to get to reasonable projections. All right, so I'm going to put that down in the comments below. But check that out, the retirement planner. That's my one call to action. And my second call to action is give me a thumbs up in the comments if you found value in today's live. All right, please do that. And if you have questions or topics you want to cover in the next live, please drop that in the comments as well. All right, but the two call to actions for today: number one, check out that newretirement.com, the retirement planner. Number one. Number two, give me that thumbs up in the comments if you found value in this live today. And again, if you're looking for more information on precious metals, like I said, they can be used as a hedge against inflation, for the collectible or the offensive perspective, we like to call it. It's definitely a way to increase your assets, grow your portfolio, grow your retirement savings, all the above. So if you want to know more about that, IG Land, DM me. Facebook Land, message me. That's all I have for this week. We will be here next week. You guys have a great rest of the week, and I will talk to you soon. This is Coach Ronnie. Bye-bye.